Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 27th of September. Starting off with the FTSE, which seems to be still in a range at or just below the 200-day moving average. Obviously, that's a key charting or technical feature there. So below that, we're bearish. Above that, we're bullish, and so slightly bearish at the moment. But that's there around 76.40. Below that, we've got the risk of a test of the 50-day moving average 75.33 now, and also the floor of that rising wedge from last month. Obviously, a rising wedge has the risk of a breakdown and then a retest of recent support, which in this case was down to 73.80, but hoping that this market will go no lower than the 50-day line ahead of a potential move to the upside, and in this case a journey towards that late May resistance line projection 77.90, but still rather betwixt and between at the moment. Moving on to the DAX, and here you can see that, say worst fears, but our fears have been delivered in terms of the market moving towards that May support line projection. That's currently at 15,100. RSI at 31, so that does suggest another day or so, or day or two of potential bottoming out for this market. Want to see this market back above the old July support there, 15,400, to unwind the potential breakdown that we've seen here today. But obviously, if you look back at the pattern for the DAX over the course of much of 2023, it's been a very toppy type of market with that final bull trap there through 16,500 at the turn of July. Moving on to the Dow, where again we're trying to strain ourselves for a recovery. Back below the 200-day moving average now, 33,800, which is obviously not a good look. We're also back at June-July support there, 33,600, which isn't great either. And there is the risk still of a test of May support towards 32,700. I think hopefully that would be the worst that we see, but at this time of the year, can't rule anything out. Want to see a quick end-of-day close back above the 200-day line at 33,800 to at least unwind that head and shoulders formation that we've had on the daily chart of the Dow since June. Moving on to Bitcoin, which has not been in a better place than the indices either. We've had the market peaking out in July, and since then trying to hold on to that January support line there, 26,200, but the way things are below the 50-day line there at 26,900, there's the risk of a test of support back in June at 24,800. RSI sort of in the middle, 20 at 48, so not much to help there, but that falling 50-day line a problem for the near term. Moving on to the stocks, and actually quite a few heroes have actually delivered on the upside. First one is Cornerstone, where we were looking for 16 pence by the end of the month, while we were above the 13 pence area. We've managed to overshoot on that one, and we've got a best case scenario target now as high as 27 pence, which is an upper parallel of the resistance lines that we've had both in July and December. So best case scenario now by the end of next month up to 27 pence, while we're above a recent resistance at 14. Moving along to fusion antibodies, where there was the hope that the shares would get back above the 50-day moving average. They've done that, but not looking too healthy today. Well, looking a bit sad for themselves today, but above that 50-day line, 6.4 pence, still looking for a move towards 10 pence, perhaps by the end of next month. Obviously, now you want to see a nice end-of-day close above the 7 pence level, which has been resistance so far this week. Genedrive is the next contender, and here looks like things have bottomed out a bit, at least temporarily. We want to see this market back above the August-September support there at 11 pence. So an end-of-day close above 11 could take the shares up to 14 and start off a potential move to the upside. We've got bullish divergence there, so lower lows in the price window for September, but higher RSI trace marginally. So above 11, looking for 14 initially there on Genedrive. Sticking in the same kind of area, we've got MyHealthChecked, and here you can see that the shares have, after gapping down rather painfully in August, broken back above the 50-day line at 11.4 pence. Above that, we're looking for the stock to retest last month's resistance, and up to the 200-day moving average, 16 to 17 pence by the end of next month. And also bullish divergence situation there, because we had the lower low for September, but the RSI basically flat on those two occasions, so around the low 20s. Moving on to a stock which is not quite rolled out shell yet, but you never know. Nostra. Here we've got a break of the 50-day moving average at 0.15, sideways shuffle above a rising 50-day line, which tends to be a good signal, especially when it's a U-shaped or a V-shaped consolidation. Just want to see the shares break 0.18 on an end-of-day close basis to take them up to 0.26 perhaps by the end of next month, which is the top of a broadening triangle from back in February. One of the stars of yesterday, which is doing rather well today, is Oxford Biodynamics. We were looking for up to 19 pence by the end of next month, and we managed to get up to not only 30 pence, which is a one-year resistance line projection, but also even up to a higher target at 38 pence, which is back from the early part of last year. In fact, if we get through 38 pence, there could be a best case scenario target after that as high as 48 or 49 pence, which is a line from the end of 2021. But at this stage, probably want to see the dust settle. The old resistance on the way down at 32 and then down towards 30, probably likely support area. So above 30, we keep the dream alive for potential further moves up towards the 50 area over the near term, but obviously done rather well very quickly. Moving on to the next situation, which is Plexus, and here didn't quite get up to the one of our last targets for the stock, which was basically 30.31. Might still do it, but the other thing to note now is that resistance previously was around 24 pence, so above 24. Still looking for 30 or 31, maybe over the next week or two, even though the shares have come up a long, long way in a very short time. Petrel is next, and here, Petrel Resources, you can see that the market has been quite sort of volatile. We've had the turnaround, higher low, bear trap from below July support, around 1.1 pence. Current view is that above the 200-day line at 1.3 pence, we could hit up to 1.75, which is the top of that broadening triangle from the turn of the year. A stock which I missed out on looking at, but it might be worth just taking a look at the charting configuration now. Here we've got PCI, and the shares gapped up sharply yesterday, and the view now is that while we're above old resistance around 57.58 pence, we could head up to a new leg on the upside as high as 80 pence by the end of next month, but we need to hold in the upper 50s there in order to deliver that kind of excessive upside. On to Pantheon, and here the shares continue to be a happy situation after months of unhappiness. Here, just currently a dance either side of the 200-day line, that's around 30 pence. Probably want to see the shares deliver an end-of-day close through 32 pence to then hopefully give us a new leg up to the upside and fill that gap down that we had from March around the 50 pence level. Could still get there to 50 pence by the end of next month while we remain above the upper 20s, so 27, 28 pence. Next stock is coming up, and it is the situation of Panthera. Here you can see that been quite a rocky ride, but the stock seems to have the buyers in there. We gapped up, unfilled gap to the upside at the end of last month, found support at that gap top, and then we put a higher low since then. The key here is holding above that gap at around 7 3/4. If we can do that, then we could be on our way up to as high as 13 pence by the end of next month. But ideally, we still even hold above that 50-day line at 8.3 pence. On to Rainbow, which is an interesting market today, given the basis, or on the basis that the company served up a fundraise of £4.5 million, and the shares are actually up. Normally a very strong signal when the shares rise after a fundraise. Old resistance here at 15 pence. Above that, we're looking for progress within a rising trend channel up to 21 pence, and that could be delivered as soon as the end of next month. Obviously, maybe some of that new stock needs to be churned up in the meantime, but while we're above 15 pence, feeling quite chipper about that situation. Interesting charting position at Saietta, which was sort of flagged to be a stock going up to the mid-50s. Obviously, the rug was pulled at the start of the week, but the shares have actually gapped back up again, and it's a bear trap gap reversal. That suggests that break of the 50-day moving average on an end-of-day close basis at 43 pence could actually get us back on track for a move up to the 57 or 56 pence area by the end of next month, which would be quite a recovery for the shares. One of my favourites, just largely because of the name, it has been Silver Bullet, and here we've got a V-shaped bull flag, which suggests that the shares still have some energy in them. The old target there was around 83 pence. Above that, we're looking for as much as £1.40 by the end of next month. That rally driven by the two major gaps to the upside unfilled, which we had both in August and then earlier this month. Finishing off with the most obscure stock in the collection maybe today, which is Sondrel, and here you can see that broken recent neckline resistance. That was around the 15.5 pence level. Above that, we're looking for the top of that broadening triangle from the end of August as high as 27 pence. And hopefully we could see that by the end of next month, given that we're coming off a very oversold RSI near the 3 out of 100 level. That's it from me today. More updates tomorrow.